Good morning from Colorado. Good morning from Beaver Creek. My name is Kai Hoffmann. I'm the @JR Mining guy over on X, and of course, your host of this YouTube channel, Soar Financially. Thanks so much for joining us for a live weekly wrap-up show here from my hotel room in Colorado. I've been attending the Precious Metal Summit in Beaver Creek over the last 3.5 days, and we have lots to discuss. S&P 500, 25th record high just being marked today. Gold is putting in a fourth week of gains in as well, trading at record high levels. And we have lots of macro data to discuss, of course, as well. You've all probably seen jobs revisions. We've got CPI data. We got PPI data, producer price index. But also we got some news on the geopolitical front. Lots going on. Russia flying drones into Poland. What is that all about? Lots to discuss in that regard. If you have any questions, this is live. Please feel free to use the chat the chat box. I'll do my very best to answer those questions during this live stream here. We have lots of topics prepared, of course. Most importantly, I do want to share my impressions about what is happening in the mining space. Sentiment was absolutely fantastic here in Beaver Creek, but I'll get to some of those insights here shortly after we've taken a bit of a look at the macro landscape here that has been presented, or some of the macro data that has been presented to us. But first, let's take a look at the week in review. I'm going to share my screen here in just a second. Going to share just all the data that we've gotten. Let me add that to the screen. All prepared. Economic calendar. Let's go. So lots of data that was dumped on us this week that we had to digest. Non-farm payrolls, annual revision, PPI, core inflation data, and inflation rate. And I haven't seen yet the Michigan consumer sentiment that's coming out here any minute now. But most importantly, jobs report and inflation, as the Fed is basing its decisions on those data points, which are, of course, all lagging. And the annual revision is a year old, and it's for up to March 2025. But let's take a closer look at that, because it was humongous, the revision. We have seen a revision of 911,000 jobs. Absolutely insane, if you ask me. I'm not sure how that is being reflected overall in the unemployment rate, because we got the revision of 911,000 jobs, and you can see that here. Where did they go? They completely disappeared. Of course, we've discussed on the program, BLS data is all a bit fishy and dodgy. It doesn't make a whole lot of sense that we're getting. Somebody registers a new business, the BLS assumes that 7 new jobs are being created, but let's assume you're an OnlyFans creator. I don't think you'll hire 7 people to help you out with your gig, so hence gig economy. But one thing that's puzzling to me personally is that the unemployment rate stayed unchanged, still 4.3%, despite almost 1 million jobs that have been lost. That's something I need to investigate a little bit here over the coming days to understand. But maybe you have an idea. Put that down in the chat or in the comments down below if you watch the review. But let me know, why hasn't the unemployment rate changed if we've lost 911,000 jobs? Massive jobs lost. Maybe we can take just a quick look at where did those jobs get lost? Leisure and hospitality, 176,000 jobs right here. Professional business services, maybe those are the OnlyFans creators. Professional services, I'm not sure. Retail trade, another 126,000. If you walk through a mall here in Colorado, it is a disaster. It is dead. So I understand that part. Wholesale trade, I don't have a Costco membership anymore, so I'm not sure what it looks like in the stores, and I'm sure it's not the Costco number in general that we're looking at. But those revisions just paint an overall trend that some of our guests here on the channel, or a picture have been painting here on the channel, that the underlying economy is not as great as the jobs reports and other data points suggest. And this is now being fleshed to the surface. This is something now that we're looking at. So, hey, Jason, thanks for joining us. Much appreciate the comment. Hope everybody can hear me okay. I haven't seen any complaints yet, so I think we should be good. But so that's the non-farm payrolls revision, which is, key, because the Fed seems to be focused very much on unemployment. So we're going to take a look now at the CPI and the PPI real quick. You've all seen the releases this week. Let's share this tab real quick. 2.9% yearly change. As expected, tariffs are starting to trickle through. We have seen 2.3% in April, but have been ticking up, of course. What happened in April? Liberation Day happened, broader range of tariffs have been announced, and they're starting to seep through. As I said last week, we're still waiting on a big tariff deal between the US and China. Haven't heard much this week about it. Admittedly, I was also sitting in meetings all week, so I haven't had a chance to investigate. A couple things that are, of course, interesting. Faster pace for food that has increased. New vehicles and used vehicle prices have gone up. That is an interesting. That is an interesting sector, probably all tariff related, as we have to import more steel and other things that are heavily tariffed. Gasoline prices are still lower. Fuel oil, of course, as well. Wonder what happens when oil prices start to rise, because that current level, based on what's happening on the geopolitical front, is almost unbelievable. I'm sitting here in the US looking at $3.50 a gallon of gas, sometimes even cheaper. I think I've seen $2.43 when I was up in Idaho. I might have been wrong, but that number stuck in my head. That's an insanely cheap gas price, insanely cheap. And we'll have to see if that continues. I've been calling cheap gas prices QE for the people here in the past as well. One lesser, focused on, what do you call it? Indicator is also the producer price inflation. That's one we got to take a look at as well, because it also cements that the Fed might be right about cutting here, because producer prices are falling. Let's just zoom in here a little bit, if that, just a little bit so you can see that better. But market actually expected 0.3% increase, but we've gotten 0.1% decrease in producer prices. Again, cementing that the Fed might be on the right path, or cutting at least once. We can all discuss what it means, cutting just once, what the impact is. I think the press conference is way more important than what we're seeing maybe as hard data being presented to us in form of a press release. We will have to listen to Jerome Powell on Wednesday to see where is he putting the nuance, where is he setting the commas, and what should we be paying especially attention to in his speech here. We'll be hosting a live stream again on Wednesday. I'll be joined by Lobo Tigre. Really looking forward to discussing the latest from the Fed here. Of course, we'll be discussing his views on potential rate cuts. Are we getting a jumbo cut? Will be interesting to see. But lots of data is pointing 100% at one cut. Let's take a quick look here at just the Fed rate cut expectations. Let me bring that up on screen here, which is always interesting. 92.5% one cut. If you go through the months, we got 3 more Fed meetings this week. There could be up to 3 cuts this week, or this year alone. I'm really curious what, again, it really comes down to messaging, because if we're expecting 3 rate cuts this year, or the market is expecting 3 rate cuts this year, how is that being messaged? Because if I was a consumer or an investor, or even a potential house buyer, I'd wait till December or even January to do anything if I know that rates might be coming down. Not sure how that will be reflected in mortgage rates. We can take a look at the 20 and 30-year bond yields here in a short second, but deflation is sort of the buzzword, or the term I keep coming back to, because it is in the messaging. And what Jerome Powell says, like, why would you buy a house now after 25 basis points if you can get a cheaper price, meaning a cheaper mortgage later on? That's the pure definition of deflation for me. Zion, really appreciate the comment. Thank you so much. We'll take a look at gold and silver here in a second. Just running through some of the macro data that we have seen here. U.S. budget. Also, really, really interesting. We got some data here as well. The U.S. House also approved a defense policy bill, approving a $900 billion budget for the Defense Department, or the Department of War. Let's share this one real quick. So the National Defense Authorization Act authorizing nearly $900 billion in military spending, and featuring a plan to streamline defense acquisition processes. We'll see where that goes. It was voted as expected along party lines. So that's the defense budget, Department of War, it is called now. I'm not sure if that all actually goes to the Department of War, but $900 billion in spending. And then we also have, I have this lined up here. I need to find that real quick, because we have gotten an update from the CBO, the Congressional Budget Office, on the U.S. deficit. So far, first 11 months of the U.S. financial year, the deficit has now risen to $2 trillion, not billion, apologies, in that space of 11 months. Higher Medicare costs have pushed higher. But one thing that a lot of outlets have noted are that tariffs are starting to make an impact, that the budget spend is decreasing. And let me just pull that up here real quick. CBO August budget. Just want to show that to you because I think it is an important tidbit of information that we have gotten, because the tariffs seem to be having an impact, but just a minor one. Where is it? It just came out this morning. Let me just find this real quick. I had it lined up, but August budget baseline 3 days ago. Let's use this one. Let's use the official Congressional Budget Office. So the total deficit, let's share this tab here real quick. Cumulative monthly deficits, you can see this. I think we're on seasonal trend, but the interesting part of here, of course, is the federal budget deficit total $2 trillion, 29 billion more than the deficit recording during the same period last year. So we're above that. Revenues increased 299 billion, but outlays also rose, but increases at least outpaced outlays. So that's an interesting tidbit. The tariffs are having a very slight impact, not enough to make any difference whatsoever to what we're seeing. So in terms of budget deficit discussions, of course, and of course, this won't have an impact on any of the Fed decisions. One other thing that we need to discuss is, of course, geopolitics. Russia flew drones into Poland this week. Your guess is as good as mine, probably, as to why. Were they just testing the NATO defense strategies? Were they testing whether NATO would come together and actually huddle up against Russia? Really interesting case because Poland invoked, I think it was Article 4 of the NATO Act, asking for help. Germany and many others came to the help. German Patriot missiles, I think it was German Patriots, was it? Just scroll down here. Well, it doesn't really matter what missiles are called, but Germany's missiles were involved, Dutch F-35s, and many others. It's an interesting thing we need to monitor because the gold price is very sensitive to geopolitical factors or impacts. So we have to watch this very, very closely. What is happening here? De-escalation, of course, is highly recommended when it comes to this. So yeah, I think we laid out a lot of macro topics this week. Sort of my thoughts on those. We talked to jobs revisions, PPI, CPI, of course. Quick look at the U.S. budget for August 2025 from the CBO, the Congressional Budget Office, and geopolitics, of course, the NATO incident dominating headlines this week. Let's take a quick look at the markets. I mentioned it in my intro. The S&P 500 has hit another high. The 25th high for this year. Let me share this tab. So you can see the 65.91, all in anticipation of Fed rate cuts. Question though, what is priced in? Is it just 25 basis points? Is it 50 basis points? Is it that jumbo cut that Chris Waller sort of suggested that really sent our sector and sent markets flying, S&P 500 and gold in general? So we'll have to see, quite honestly, what is priced in. It is an interesting factor that we have to see at the S&P 500. It's insane levels. We keep running away. Dave Hunter, I had on the program here yesterday. He mentioned we're in that blow off top 7,000 points, 7,500 points are absolutely possible right now. Again, messaging. What is Jerome Powell going to say? Are we going to see QE again? Is QT done? Are they done tightening? We'll have to see. So a lot of nuance, a lot of importance being put on the Fed meeting this week that is happening in 5 days' time. Let's take a look at the bond yields as well as we speak here. Let me pull up just a 10-year real quick. And that's a 10-year. It has been dropping in anticipation of those rate cuts. Everybody's trying to lock in higher rates before rates potentially go down. And yields might be dropping along those lines as well. 10-year down to 406. The 2-year, which is of course an important measure as well. I mean, we can pull that up, or I can take a quick look at the 2-year here as well. Let's see, let's take a quick look at the 2-year. It is 3.56 if I'm not mistaken. Bonds, United States. Let's take a look. And the 2-year is at 356. As I said, I looked that up earlier, so no change there. But David Hunter has also mentioned that the bond yields, especially for the 10-year, should be coming down much more. He's predicting a bond market in U.S. government bonds, 2.5% yield, very much possible here. So that's, I think, the trend we're seeing. People are locking in those higher yields until we have more certainty on what the Fed is going to do here. Suggestions are, of course, that the Fed should be cutting all the way down to the 2-year yield level, which is 3.56%. Not sure if you agree. Do you actually agree? Should the Fed cut? Really curious. Put that in the chat. I do want to hear from you. It is a controversial topic. We had Dr. Sri Kumar here on over the weekend as well, and he advocated for rate hikes because he doesn't believe that inflation is tamed yet, and the unemployment side isn't worrying too much for him. So what do you think? If you're watching here on YouTube, put that in the chat. I do want to hear from you. That'd be interesting, and really appreciate that. Let's get some action going here. S&P 500, I've shown you, we looked at bond yields. I think we need to take a look at gold now. We definitely have to take a look at gold. This gold chart is phenomenal. Gold is rallying. We are seeing inflows in gold ETFs that has been driving the gold price higher. 36.51 as we speak, 36.52 as we speak here, and it is running. This is an all-time high yet again. Let's zoom in here just a little bit. And the rally in recent days, ever since the Jackson Hole meeting, we are up. What is it now? Over $200, or exactly $200 since the speech in Jackson Hole here on August 22nd. Let's see here, August 21st. Let's see, 33.52. We're exactly up. Or $300. My math is wrong. $300 since that. That's an insane move for the precious metal. Let's hope it's not overhyped, but we are seeing ETF inflows supporting the move. Generalists are waking up, trying to hedge their bets in the main markets with gold, and we're seeing that right now. Is silver following? Let's take a look. Silver is following. Let's take a look at this beauty of a chart. $42.3. We have broken out over $42. That used to be a massive resistance. I'm not a technical analyst, and you can even see it in my charts here. Let's be honest. Let's bring this back down together. Let's take a look here. But also, silver has broken out. What is the next stop? Is it $50? Your guess is as good as mine. We'll have to see what silver does. Of course, positive momentum. Momentum is the key buzzword here in gold and silver. We're seeing lots of it, and silver with a breakout over 42 is having that 1.8% plus this morning. This morning alone is a massive indicator that silver is catching up and breaking out. Silver stocks are catching massive bids here as well. Valuations are running high. Running high. It's actually a good segue. We'll talk about some of my impressions from the Precious Metal Summit here in a second. Before we do that, let's also take a quick look at the December future. I've got that lined up as well. Gold 36.88, yet higher yet again. Close to 3,700. But the spot market is catching up to the futures, which is interesting. And we'll have to see what January contacts look like here very soon. But the trend is obviously higher, and really excited to see that. Big topic here, of course, and excited to see what is happening in the gold space. But of course, always a bit cautious. We do have to wait what is happening on Wednesday. I keep coming back to it. The Fed and the Fed language is going to be so important. All right, so we talked precious metals, we talked silver. Momentum is key here. I'm in Beaver Creek. I'm sitting in the hotel room here in Avon, Colorado. Spent 3.5 days up in Beaver Creek, meeting over 32 companies, talking with a lot of bankers, brokers in between, and we have to share and discuss sort of what did I see? 32 meetings. What's sentiment like in the mining space? You can guess it. It's great. People are happy. People are excited. Last year, I said, well, we're in the final stage of grief, meaning acceptance. Nobody really complained last year at this event. Neither the CEOs nor the investors talked about how terrible things were. I think that was sort of the turnaround time. And if you look at some of the price moves in the stocks, I think it was perfect sentiment indicator. And if you were trading based just on sentiment, you could have made a lot of money starting last September. So very, very interesting. So what was sentiment? It was euphoric, of course, but I didn't see any champagne bottles popping, no big champagne bottles sitting on tables. A lot of people are sitting on gains, of course, in their portfolio, but not unrealized gains. Let's say that. M&A wave hasn't really caught on. The juniors haven't been bought up yet, so there weren't many wins to register or celebrate. We're just all patting each other's backs, of course, saying what geniuses we are, because our portfolio is finally moving in the right direction after almost 15 years of misery with blips in between. So things are happening. And maybe one key takeaway, that's my key takeaway from this event, and I want to share that with you, is that we have to get used to a new price floor in the precious metals. Gold is trading at 36.50 as we speak. A lot of the price deck assumptions of the analysts are way lower, $2,200, $2,300, $2,400 gold. And I have to adjust my thinking about looking at these mining stocks. New price floor, $3,000 or even $3,500 if you were to use spot here, which means that even marginal projects are very, very attractive now. high-grade starter pits are even more attractive. Paybacks are absolutely insane, and we have to get used to those higher valuations. I met with a company yesterday that's currently producing 100,000 ounces in Australia with an outlook of maybe 200,000 ounces down the road, maybe 2 years away, 2.5 years away. They're trading at a $1.9 billion valuation. For me, of course, that is ultra rich. There are other gems that are still lower, but we have to look at higher price levels. We were so used to, at least I was used to, companies coming online, meaning on market with a new project, perhaps with pre-money valuations or pre-market values of $5 million. We have to get used to floors that are now 20 million, 25 million, because we are in a higher price environment. All of a sudden, lower grade projects make a lot of sense. Margins are absolutely insane. A lot of the companies are producing at over $2,000 margin, and that is being reflected, of course, in the quarterlies, which we're going to get a new set here in about 3 weeks. 3 weeks? 3 weeks? No, about 3-4 weeks. So we'll get production numbers, and then, of course, at the end of October, we'll get more financials, Q3 financials. Really excited to see those. Bear market mentality. I have to shake it off. Is one thing. I've big homework. I need to shake off the bear market mentality. This doesn't mean you jump in hand over fist and buy everything that is that has the word gold or silver in the name. You don't do that. You still need to do your due diligence. There's still opportunities to be had in this space. I've met with a lot of companies. They're still undervalued. Is maybe not the right word anymore. Nobody's really undervalued these days anymore, but maybe cheaper than others in comparison. And one thing especially I've noticed that price stacks, if you look at price stacks and valuations, like PNAVs is a famous indicator a lot of companies or investors and analysts look at when they look at mining stocks. If that gets re-rated, those PNAV multiples, they will come down massively. So we're still in a very cheap price environment if you look at it, because we're being fed data that is based on wrong gold price assumptions. So that is definitely one of those takeaways that I'm working on. But let's quickly, what was the buzz at the conference? Like always, there's always one theme, there's always one name, and always something that comes up that everybody discusses. It was Tether this time. It was Tether, meaning the crypto space investing in the gold space. That is absolutely a dominating headline here at this event, or was a dominating headline here at the event. Tether invested already over 180 million US dollars into Elemental Altus royalties. As you know, they are merging with EMX. That was announced last week. Big merger, going to create $1 billion royalty company that is going to be backed by Tether. Tether already owned 47% of Elemental Altus, put in another $100 million and is now pushing forward. Elemental just announced rollback and potential New York Stock Exchange listing. So Tether is pushing aggressively here, trying to invest their cash flow. I've been told they produce $1 billion in cash flow every month that they need to allocate. They're investing now in gold mining stocks, meaning Elemental Altus royalties, which is going to be named Elemental Royalties. But they're also buying farmland. And apparently they have over 80 tons of gold sitting in vaults in Switzerland, because their gold coin, their gold stable coin, is being backed by physical. So we're seeing a lot of momentum. The crypto pros coming back to gold, the real asset, the real hard asset that is worth holding. So really interesting to see that come back full circle. Of course, there were two more things that were being discussed amongst investors at Beaver Creek. The Barrick Hemlo deal that was announced just yesterday. Barrick is selling its only and last Canadian operation to a shell company being run by Bob Quartermain. You probably know Quartermain if you're in the mining space. Pretium, I think it was Pretium. I need to double check that actually. But he's also the chairman and the CEO of Dakota Gold right now, a very famous figure in the space, supported by Rick Rule and many others. And he's buying the Hemlo mine, 140,000, 160,000 ounce producer for $1.9 billion. I've queued up the press release real quick just to share, so we have something to look at here on screen. So it's not just me babbling on here that you have to stare at. But Barrick selling it, Hemlo for $1.09 billion. And I got to readjust my thinking. Like, because one of the feedbacks, or I heard investors say at the conference, is like, well, this is an expensive deal. Is it though? Let's do the math. Let's quickly look at it. Let's share this thread. As I looked at the 2025 outlook for the project, 140 to 160,000 ounces. Forecast cost of sales, or all-in sustaining costs, are more important, 1,600 to 1,700. If you do this roughly, if you do a rough math, take midpoint of guidance, midpoint of costs, you come out at roughly $5.2 billion in revenue at 3,600 at spot. That's insane. But you also have a margin of about $2.2 billion. My math might be off by $500 million or something like that. Just my point is, though, is $1 billion expensive buying a 150,000 ounce producer? Well, one thing apparently I've been hearing that Hemel hasn't been explored in 20 years, so there might even be a lot of upside left. But those are the new price levels we need to get used to. Is this an expensive deal? Honestly, hindsight will tell us. We will find out. First look, it actually doesn't look too bad if you look at it. If you do the metrics, if you buy 150,000 ounce producer for $1 billion these days, that seems to be the new norm. Absolutely. And then moving on, we have to look at the absolute mega merger. It might be one of the largest mergers in mining history in general. Anglo-American and Teck are going to merge, creating a massive copper giant. And of course, the merger is motivated by copper here. No other reason to do this deal. Teck recently sold its coal assets only to merge again with a company that has a lot of coal assets. But if you look at the breakdown, and S&P has done a fantastic job here, Kip Keen, who's a fantastic journalist here in the mining space, in my opinion, has put together this overview. It is about the dark matter here in this chart. It is about copper. One big question I have, and I'm not an analyst of these major companies, is of course, how is the new company going to handle all the investments Teck has in the exploration space? I think the number I have in my head is $300 million that is invested. Their partners in Bunker Hill and many others. And the question is now, how are they going to handle that? Haven't found an answer to that yet. Haven't seen anything, but I also haven't had a chance to listen to the analyst call earlier this week. And so looking for the impact there. I've been talking to a few bankers. We are expecting a lot more deals next week. Denver Gold Conference is kicking off here on Sunday afternoon. So expect fireworks, especially after the Precious Metal Summit. We'll probably see a lot more financings come out of this conference. A lot more news going into the next one. I hear there's still $1 billion deal to be had. IAMGOLD might be in play, I've been hearing. Their Casa Berardi from Hecla, apparently there's a sales process being run for that mine as well. So lots of moving parts, lots of excitement, and that re-rating mentality is starting to trickle down. Investors and companies and banks are looking at deals very, very differently. And if you get used to those higher price levels, and you might be, or if you get used to it before me, you definitely can front run me in many positions, of course. Let's take a look at the chat here. If you have any questions, put those in. I'll use the last 3 minutes here of this live stream to look at some questions. Really appreciate those. Maritime Resources, fantastic deal as well. I was in that deal years and years ago. If you followed me on X for a while, that was a company that I've been following. Finally, the takeout has happened. Newfound Gold is buying it. The stock is still moving higher, now trading, I believe, above takeout price. So we'll see what that means. But that has been a success. Garrett McDonald, who I met here in Beaver Creek, has done a fantastic job sticking to its knitting and really moving this forward. CS is also asking follow-up. What's my target level for NFG? Quite honestly, I haven't looked at the metrics of the deal and what it means and production scenarios. Can they just process their bulk sample at Pine Cove? We'll have to take a look. But of course, if they start producing, again, get used to a higher price level and then readjust your thinking. Whatever I say now, it comes still from bear market mentality, $1,600, $2,000 gold. Adjust higher. Do the bulk sample calculation, whatever the number was, times 3,500 if they were to do that tomorrow. And then you can apply your multiples. Yes. So thanks for the question. Really appreciate that. If you have any other questions, please put those in the chat here in the comments below. Otherwise, I'm going to wrap up. CS, I'm not giving investment advice at all, but gold is doing well. They just bought a producer. Your guess is as good as mine, quite honestly. So we're in a very, very euphoric environment for mining stocks. Do your homework. Feel comfortable with the price levels. I'm not giving you any investment advice, but momentum is with us right now. Really, really important. Manuel, great to see you. Thanks so much for joining us. Much appreciated. Greetings back to Belgium. And I think if we don't have any further questions, I'm going to wrap it up here. Really appreciate it. CS, your target calculation is $25. I believe the stock just broke 3. So kudos. Rocket, diamond hands, don't sell. Good luck. Not investment advice. Wish you all the best. But everybody else, thanks so much for joining us here for this weekly wrap-up. If you haven't done so, hit that like and subscribe button. It means a lot to us. And if you haven't signed up, join us in Frankfurt. DEUTSCHE GOLDMESSE, November 14th and 15th. You get to meet myself. Sorry about that. But also many other amazing keynote speakers. Rick Rule, Alex Krainer, Keith Neumeyer. Join us there. It's free for investors to attend. This is an investment conference. We have about 32 companies joining us, high-quality companies joining us, the CEOs joining us. Make sure you meet them. Make sure you look them in the eye and make sure you ask your questions. It is now even more critical than ever, so do that. And thanks so much, everybody, for tuning in. We'll be back with lots more on SOAR Financially. Take care out there.